So welcome to your monthly real estate market report for September of 2022. My name is Margaret Jackson with the professional agent group at Keller Williams Realty in beautiful Tampa Bay, Florida. And today I'm going to walk you through three of the most important topics happening right now and influencing the Tampa Bay housing market. So we're going to be going over mortgage rates and what's going on with those. We're going to talk about home prices, and to wrap up, we're going to talk about affordability. And that's top of mind for everyone, almost everyone right now. And we're going to dig into how that even gets measured and why you're hearing about bad affordability on the news, which is not exactly how it's working out. So I'm going to begin today with mortgage rate projections from the experts. You've been listening to the news. You heard that we just had a change to the Fed rate of interest, and that goes on then to impact mortgage rates, which we are seeing. So looking back at mortgage rates, though, if you've been following along with us, you've seen this before, but it shows is how much rates really rose from the beginning of the year all the way to mid to late June-ish, and then since then there's been all this volatility and fluctuation in the rate. So why is that? Well, inflation is the enemy of long-term interest rates, and that's certainly something that we're following closely right now. So the Federal Reserve doesn't call mortgage rates, but they're certainly making moves right now to ease that inflation, aren't they? And when that happens, mortgage rates tend to respond. So what are the projections going forward? Well, just yesterday the Fed met and increased the base rate by 0.75%. That has the power already to affect those long-term lending rates like mortgages, and we're seeing market rates rise and fall on a daily basis. Now everyone wants to know though, where does this go next? Well, if we look at these projections from Freddie Mac, Fannie Mae, MBA and NAR, these are the latest data that we've got as of August. And if we average all of those projections together over the next 4 quarters, we can see that over in that right-hand column, they think that they're going to stabilize over the next year. The experts still feel that the Federal Reserve is going to get inflation under control. I think as we look at this, low to mid 5s is the projection for into next year. That would bring a lot more predictability for buyers. So another topic on everyone's mind is home price appreciation. I'm going to do my best to explain it, because what we're hearing right now is that home prices are decelerating. And we're talking about deceleration. We're seeing it in some markets with sellers bringing their list prices down, but there's a lot of confusing information out there, and I want to do my best to share this with you. So we're going to start with this quote from Mark Zandi, Chief Economist at Moody's Analytics. He says, "I don't think national housing prices will decline in a meaningful way, but there may be some price declines across the country." So basically they're talking mostly about out west in California and over that end of the country. Now I want to give you some context to this though, to show how home price appreciation is still expected going forwards based on today's buy demand and low inventory. But what does that mean in the grand scheme of things? Well, this chart may help with that. Appreciation is slowing but not depreciating. That's where deceleration comes into play. Let's walk through it. So the percent year over year of homes with price increases for 2022 so far. This is data from CoreLogic. Later was just released. And so you can see year over year, January, February, March, home prices were accelerating crazily. A rapid pace, record-breaking home price appreciation at the beginning of the year. But what happened since then? We've come off that high of 20% year over year home price appreciation, and it's starting to cool. That's what you can see in May, June, July, the deceleration in price increases. So the pace of appreciation is slowing, and that's deceleration. It's not depreciation where prices would have to go into the negative. Now, homeowners, yes, we are seeing some drop in the list prices, for example. If you had a client could sell for $400,000 3-4 months ago, now it's going to sell for $370-ish. Now, in that case, it's going to feel like depreciation, especially to those homeowners, because things are measured in a couple of different ways. So year over year, what you're seeing here is continued appreciation, but at a slower pace. But month over month, we're certainly keeping our eye on that because that's what your clients are looking at. And that's what you're feeling if you're thinking prices are going down. So we're going to keep our eye on the home price appreciation rate. We still know there's plenty of buyers out there in Tampa Bay right now, and we've still got low inventory. But we know that prices are still projected to continue rising, but at a slower pace. So we're going to keep our eye on all of that. And truthfully, what that means is that the list price a year ago was the floor of negotiation. You could list at this and then it would get bid higher with multiple offers, those bidding wars, bidding the price up. That was the floor of the negotiation. And what's happening right now as the market starts to shift is that the list price is much more of a ceiling for the negotiation, and buyers have got that little bit more negotiating power. And we're seeing that change month over month. And that's what we're keeping our eye on. So leading up to the pandemic, the average or typical home price appreciation over a year was about 3.8%. So that's where we're starting to look back to getting on that trend line as we move forwards. Now, one thing that we have to remember is the majority of that home price appreciation happened earlier in the year. It happened at the beginning of the year, and we're seeing that starting to soften now. But experts are still projecting by the end of the year overall 11.3% home price appreciation for 2022. So why are they still projecting that? Well, that's because inventory is still historically low compared to 2019 before the pandemic. Inventory is still historically low, down 42.2% from where we were the same week in 2019. And that's what's continuing to drive upward pressure on home prices. Inventory is still low, and we've still got buyers in the market in Tampa Bay. Let's talk for a couple of minutes about affordability. Now, when we get to talking about this, you're going to hear all kinds of different things in the news. First place, Housing Affordability Index that NAR releases. They release it every month, going back to the 90s. So the way that you read it is the higher the bar, the more affordable a home is. And right now you see that red bar below the years where we showed here going all the way back to the 90s. And what stands out are the years after the housing crisis, where distressed properties dominated the market. The high of that market, the Housing Affordability Index read 197, now we're at about 98.5. So the way you read this is 100 reading of the Housing Affordability Index is rarely an even reading. It means the average individual, the average household in this country can afford 100% of the average mortgage payment. So it's kind of even, right? And we've even got a lot of cover from interest rates over the last several years to help develop that affordability. Well, now it's at 98.5%. So technically things are less affordable. But this is not a disaster scenario by any means in housing affordability. And it's based on three things: the price of homes, based on interest rates, and it's based on wages. And that's how they come up with the affordability index. So compared to 1 year ago though, the monthly mortgage payment rose to $1,944 from $1,265. That's an increase of 53.7%. So homes are less affordable right now. Mortgage payments have been increasing. Another thing we want to start looking at to break down affordability and understand that is we want to look at what is the average mortgage payment or income committed to a mortgage payment. And right now it sits at 25.4%, assuming a 30-year fixed mortgage, 20% down payment on a median price home with a median income. So affordability has definitely dropped, but it's not a disaster situation. So if you're hearing about affordability in the press, that's going to kind of give you some context to what that looks like. So what can you do in a scenario like this? Well, I want to wrap up with a couple of things and give you a couple of resources of things you can do. So 3 things right now I think you can do if you're struggling with affordability. First, expand your search to different areas. You might not be able to be within 20 minutes of the top beaches. Maybe change your criteria. If you were looking at buying a home nearer to the beaches, maybe you need to look a bit further out at something that is more affordable. Second thing you can do is explore alternative financing options. We work with some great lender partners. They can help you understand, this is what you really qualify for. Here are some great products in the market. This is how you could manage some of your other debts if you have any, and this is how you could structure the debt that you're taking on in the mortgage. There might be some options that you haven't thought about, so let us connect you to some great lenders. Third thing, look to see if there are any grants or have you any access to gift funds, or downpaymentresource.com is a great resource for you. And some of the lenders that we work with work and target down payment resources as well. So we hope you've enjoyed this video. Please like it, remember to subscribe, share it with your friends, check out some of our other videos, and we look forward to seeing you on the next one. Have a great day.